Welcome in this video. When is Xcn coin new pump? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When the chart is examined carefully, a significant structural support zone stands out at the current price level. This area has previously served as a point where strong buying reactions occurred, liquidity was accumulated, and the market reversed direction to gain upward momentum. In technical analysis, such levels are referred to as a bullish order block. Bullish order blocks are typically zones where large buyers, such as institutional investors, enter positions and provide the liquidity needed to push prices upward. The current chart structure shows that the price is approaching or has already touched this bullish order block. This touch is quite valuable from a technical standpoint because the likelihood of an upward reaction from this area, where the price previously bounced strongly, is relatively high. Especially these kinds of order blocks not only represent past price actions, but also mark strategic levels where buy orders accumulate and algorithmic systems may activate. This means that a potential upward move from this level may not be a random reaction, but the start of a strong rally fueled by market makers and major players. In this context, bullish order blocks are considered not just as support zones, but also as areas that provide strong signals for potential market reversals. A bounce from this area could indicate increasing investor confidence and the triggering of a new bullish wave. Such strong blocks that form during short-term downtrends may be intentionally targeted by large investors looking to gather liquidity. Therefore, a rebound from this level may signify not just a correction, but the beginning of a new trend from a technical perspective. At this point, it would also be useful to closely monitor volume analysis as the price reaches the bullish order block. An upward move from this level, accompanied by rising volume, could indicate not just a temporary bounce, but the beginning of a sustainable and strong rally. Increased volume represents the strength of buyers entering the market, and when this volume supports the upward price movement, the sustainability of the rally significantly increases. The overall structure on the chart indicates that the market is currently at a decision point. The interaction between price and the bullish order block could be highly decisive for future price movements. If the price reacts upward from this level, it may lead to testing and eventually breaking previous resistance levels. This in turn could signal a trend reversal on larger time frames. Additionally, a reaction from the bullish order block can also be interpreted as a sign that investor sentiment is turning positive. Most market participants closely monitor these structural support areas and often prefer to open positions at such levels. If a strong reaction occurs from this point, it can restore confidence in the market and encourage new investors to enter, further contributing to upward price movement. In conclusion, the current price level represents a highly strategic point in terms of technical analysis. Since the bullish order block has previously played a role in guiding the market and triggering strong reversals, any potential upward move from this zone could mark the beginning of a new bullish wave. If the price breaks out from this area decisively, it may be a key factor in determining the market direction in both the short and medium term. Therefore, closely monitoring this area is crucial in order to avoid missing potential opportunities. But we can't rely solely on order blocks for analysis. Let's also look at other metrics. Stay tuned. When we look at the chart, a significant horizontal resistance level that has been tested for a long time stands out. This level has historically been an area where market participants have frequently taken short positions, where supply has intensified, and where sellers have strongly stepped in. In technical analysis, such zones are considered highly strategic, as they are closely monitored by investors and can be critical in determining price direction. So far, the price has approached this resistance level several times and even attempted to break above it with minor wicks, but has not yet managed to hold above it decisively. However, each new touch weakens the resistance. Resistance points are like glass walls. Each touch creates a crack. When enough pressure builds, that glass wall breaks, and the price finds a clear path upward. We may be facing a similar situation now. The price is testing this level again, and this time it may do so with stronger and more determined structure. The repeated testing of the resistance level shows that buyers have not given up and that upward expectations persist. While sellers try to defend this level, continued demand and increased buying pressure may eventually break this defense line. If the price manages to surpass this resistance, what is known in technical analysis as a breakout occurs, which typically triggers a strong bullish wave. Many investors are waiting to open positions above this level, and when the breakout happens, these investors enter the market, potentially resulting in a sharp upward move supported by increased volume. Moreover, breaking this level may not only signal a short-term move, but also the beginning of a medium to long-term trend reversal. Breaking resistance zones reflects a change in overall market sentiment and shows that bulls are starting to take control. This psychological shift allows the price to move freely, not just technically, but emotionally as well. At this point, investors stop asking if the price will go up and start wondering how high it can go. After such breakouts, the price often moves smoothly toward the next resistance zone. If the breakout is supported by volume, the likelihood of a sustained rally increases significantly. Volume is one of the most important indicators confirming the strength of a breakout. If the resistance is broken with rising trading volume, it is a sign not of a temporary spike, but of a lasting change in direction. This can pave the way for strong and rapid price increases. Usually, after a breakout, a retest process occurs. This is when the price returns to the broken resistance level to test it as support. If this test is successful, meaning the price bounces from the new support, it creates a strong signal of confidence for investors. What was previously an unbreakable level now becomes a reliable base and offers an entry opportunity for new positions. Considering the overall chart structure and the way the price is approaching this resistance, the potential for a breakout appears to be quite high. Especially with the formation of higher lows recently, it indicates that buyers are increasingly willing to transact at higher prices. These structures also resemble an ascending triangle formation, which typically leads to upward breakouts. Breaking the resistance is not only a technical development, but also marks the start of a new psychological phase in the market. Many investors may start buying with a fear of missing out mentality, which can accelerate the price rally. Additionally, those who previously closed positions at this level may return to the market, further increasing buying pressure. The MACD indicator is one of the most reliable technical tools that investors frequently use to determine trend direction and measure momentum in the markets. This indicator is especially important for assessing the strength of a trend and whether it is likely to continue. One of the most notable elements on the current chart is the convergence of the MACD lines in the lower region, followed by a bullish crossover. These types of crossovers are generally considered reversal signals in the markets and are among the first key technical confirmations investors pay attention to. Particularly during periods when the price has been moving downward, the convergence of the MACD lines in the lower region, followed by an upward crossover, provides a strong clue that the downtrend is weakening and buyers may be stepping back in. This crossover is often the first sign of a potential shift in market direction. If this crossover is accompanied by a shrinking of the histogram bars or a change in direction, it further enhances the reliability of the signal provided by the MACD. The current crossover has occurred as the MACD line and the signal line have come together at lower levels and begun to move upward. This formation is generally interpreted as the first step of a positive development. However, for this bullish movement to turn into a stronger upward wave, the next important step is for the MACD lines to move above the zero level. This is because the zero line acts as a threshold level in the MACD indicator. We should wait for the lines to cross above zero. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.